Hello everyone, and welcome to Fluent Financial's What You Should Know for the week of March 22nd, 2021. My name is Mike Lanise, and I'm your portfolio manager at Fluent Financial. This past week, we saw a little bit of a recovery in what was otherwise a down week, with the S&P and Dow Jones averages rebounding from earlier losses on Friday, while the NASDAQ ended up higher. Stocks gained in strength after the Wall Street Journal published an op-ed by Fed Chairman Jerome Powell, where he reiterated the central bank's commitment to provide aid to the economy as long as it takes. The Fed materially upgraded its real GDP projections from 4.2% to 6.5% by the fourth quarter of 2021. So that's showing confidence in the Fed of the strength of our economy. Core and headline PCE inflation numbers were also revised up to 2.2 and 2.4%. Typically, the inflation numbers the Fed targets are 2%. So if you're having 2.2, 2.4%, that means we are running hot in the market inflation-wise, and the Fed expects that number to pull back to a 2% level, which is acceptable to them. The 10-year U.S. Treasury breached 1.75% this past week for the first time in 14 months, and it's already surged 80 basis points this year. Currently, it's trading around 1.685%. The significance of a higher U.S. 10-year Treasury rate is that people can invest in what is ultimately a risk-free rate and get 1.75% yield. So some of your riskier yields, some of the other instruments that you're trying to generate yield from, particularly your high-flying tech stocks with really high PEs, those get sold off and safer investments get purchased because a return can still be achieved. For the week, the Dow fell 0.5% and the S&P and NASDAQ both dropped 0.8%. But for the NASDAQ, that's its fourth week of losses in a 5-week period. Brent crude rose 0.2% on Monday morning after falling 6.8% last week. And that's the biggest dip since October, so in a 6-month period. Demand we saw slowing over in Europe because they are having some additional lockdowns and some vaccine distribution hiccups. But overall, globally, energy demand is recovering at a steady pace. For the year, the S&P is up 4.18%, while our VNO stock portfolio is up 8.7%. For the week ahead, investors will be keeping an eye on the U.S.-China relations after their frosty summit in Alaska last week. The Treasury yield curve will be watched closely for the reasons I just stated, and there's going to be an increased focus on the potential for higher corporate taxes. So what happens is the Biden administration wants to raise corporate taxes, but seems to only do so if the economy is doing well. So a strong economy, while that bodes well for the economy, obviously might have the brakes tapped if corporate taxes are raised. The economic calendar for this next week will include durable goods and core inflation numbers. And then we have an earnings report coming out for GameStop for any of you who've been watching the volatility in that stock. The symbol there is GME. For an options update, March options just expired this past Friday, and our stock income portfolio generated 1.31% cash from the sale of 85% of the portfolio. Our Advantage portfolio generated 0.88% of cash from selling only 50% of its portfolio. The stock income portfolio performance-wise was up 4.75% between the February and March options expiration, while the S&P was up only 0.16% during that time. So it was a really good month for us. As always, thank you for tuning in to What You Should Know. Have a great week.